What is up, traders? Hope everybody's doing well. Today, this is lecture 3 of this series. Today's lecture is going to be talking about fair value gaps or inefficiencies, right? Buy side imbalances, sell side imbalances, and how to identify them. Okay, so what is an inefficiency? An inefficiency, first of all, fair value gaps are made of at least 3 candles, right? So that's the bare minimum. An inefficiency is at least made of 3 candles. What it is the following. So this is a bullish inefficiency. Let's try to get these. Okay, that's good enough. So we all know that candles have candle bodies and candle wicks. So let's assume that this candle has this wick, has this wick. I'm sorry if the drawings are off, but let's just say this one has this wick, has small wick. This one has this wick, and then like this, right? So these are 3 candles, right? 3, let's say, up close candles, bullish candles. A fair value gap is an area that only has a candle and has no wicks passing through. What do I mean by that? As we can see here, price has this up close candle, this one, and this one. There's an area in between this wick and this wick that is empty of any wicks, right? So we have this big bullish candle that is inefficient in its delivery. Markets are always efficient in delivery, and what I mean by that is any move up has to have a retracement and an efficient retracement. You cannot have a shot up like that. You will almost never see this unless with very big news, and these big shots up of candles usually in the future are all filled up, right, to fill in this huge move up. So for us to balance out price, an inefficiency like this, which is from this wick to this wick, this is the inefficiency right here. This is a bullish fair value gap, right? Or a buy side imbalance, sell side inefficiency, a BISI, right? So this is ICT calls this a BISI, BISI, buy side imbalance, sell side inefficiency, right? So this happens when you have at least 3 candles. The middle candle is a candle that has pushed up in an inefficient manner, and then the wick of the previous candle, the wick of the candle after do not close. So if we had something like this, let me show you guys. If we had something like this, so let's draw the same thing. We had this candle, and then we have, let's say, this candle, and then this candle. Or actually, let me draw them the same size so you guys get what I'm trying to say here. So, boom. So let's assume they're the same size. If we had something like this, where this is the wick here, this is the wick here, like so, and then we have a wick here, wick here, wick here, right? In this case, there's no fair value gap because the price here is overlapped by this wick and this wick. So this portion from, let me show you guys. So this portion from here and lower is all overlapped by this wick. And then this portion of price from here and up is all overlapped by this wick. So there's no gap. But in this case over here, the wick ends here and the other wick ends here, right? So there's an absence of wicks or an absence of price covering in this region over here, in this region over here, right? There's an absence. Now this absence has to be filled later in the future, right? Market will continue up maybe, and then start to break lower, to kind of come down into this inefficiency, and to then maybe, based off other things we're going to learn, reverse, take a trade, ride it to the highs, or for it to disrespect it and then inverse it to then continue lower. We'll talk about those later, but for now, I just want you guys to figure out and see what an inefficiency is. For the bearish perspective, it's the same thing, just opposite, right? So I'm going to take you guys now on the charts, show you guys live examples of these. And so we can identify them. Okay. So I'm going to go on the, let's say, 4-hour chart. I'm going to go 4-hour chart. Okay. Go random. Okay, here. So I just picked a random chart. We're only looking for inefficiencies. Okay. In this price leg here, right? So this right here. I want you guys to look for the first inefficiency that you guys see. Let's say right here, right? So this price leg. What is the first inefficiency that you guys see? Pretty easy. It's this right here. From this wick to that wick, then extend out. So that portion of price is called an inefficiency, right? So we have this candle, the wick reached here. The candle after had this big shoot up, inefficient, right? There's no sell side. It's inefficient. It's buy side imbalance. It's a buy side imbalance. It's just one shot up, and it's inefficient in sell side delivery. It's buy side imbalance, sell side inefficiency. So it's inefficient in sell side delivery. The candle after that closes over here, and the wick reaches here. So this region that we have outlined in the white box is buy side inefficient or imbalanced, buy side imbalance, sell side inefficiency. It's inefficient in sell side delivery, right? So now basically, obviously, fair value gaps, as I said, price tries to rebalance it, so it eventually in the future comes back down, fills it completely or partially. We're going to go over these, why sometimes we want to see it filled out partially, sometimes fully, sometimes we don't even want to see it touched. Sometimes we want to see it inversed, so price to close completely below it, to kind of give us some signs or a reason to take the trade in the opposite direction, take a sell. So for now, I just want you guys to know how to identify a bullish fair value gap and a bearish fair value gap. This is a bullish fair value gap. Now we're going to look to a bearish one. Same chart, same place. We're not going to go far. In here, do you guys find a bearish fair value gap or a SIBI, sell side imbalance, buy side inefficiency? So sell side imbalance, buy side inefficiency, right? It's when in sell side it's imbalanced, it's one shot down, and it's inefficient in buy side delivery. Where do you guys see that? Of course, should be easy to identify. It's this right here. Then you extend that. So here, this is a SIBI, sell side imbalance, buy side inefficiency. So it's imbalance in terms of the sell side delivery, and it's buy side inefficient, sell side imbalance. It's imbalance in sell side, yes, and it's inefficient in buy side delivery. There's no buys or buy side that was taken in this range. There's no buy, there's no bullish candle, there's no wicks, there's nothing in this region, right? So we want to see price come back in the future to fill this gap, either with a wick or a candle, doesn't matter. We want price to lay over. We want to see something. It's like a drawing, right? So let's say you have a paintbrush and you painted this one side. there's no paint in this region. There's paint here. There's paint here. But what about this region in the white box? There's no paint. So you want to come back and paint it back. Right now, we have one shot down and one shot up. It's balanced now because the market's in its nature is balanced. Market cannot forever just shoot up or down. It has to rebalance. Okay. So now here, at this point in time, this is a sell side imbalance, buy side inefficiency. But then when price came back and laid over top of it, now we're balanced. Now we're good, right? So, and again, it doesn't have to close fully. The candle, as long as we have a wick in this. So the candle can close here and we're good. The candle can close here and we're good. The candle can close fully and we're good. As long as we have a wick or a candle that is filling this imbalance, that's all we need. Right now, again, in the future, I'm going to talk about how sometimes we want to see it not tapped into at all. Sometimes we want to see it tapped into partially. Sometimes we want to see it just halfway tapped into. Sometimes we want to see it fully filled. Sometimes we want to see it inversed. Like, for example, if we extend this fair value gap, and by the way, very important point, fair value gaps or inefficiencies can be extended in the markets. This is ICT concepts. ICT extends fair value gaps, right, in the future. You don't use it once and that's it. No. Fair value gaps are extended in the future and can be used later on. So as we can see here, and they can be inversed and used as inverse PD arrays. So as we can see here, price initially made this sell side imbalance, buy side inefficiency, filled it, respected it, and then at one point it inversed it completely, closing above. Right now, by the way, in this movement, there's no imbalance because you have this huge wick. Yes, we have this huge up close candle, but there's no imbalance. This is efficient, right? The drawing or the paintbrush came up all the way up here, came back down, came all the way up here, and then we came down. There's nothing that hasn't been painted. Whereas here, we have this portion that was painted, this portion that was painted, but this portion was not, right? So later we have to see it painted. Now, I said when we inverse it, and I'm gonna talk about this later, but when we inverse it, which we can, and we have to extend these PD, we can use these PD arrays in the future, right? When they're extended and inversed here, now we can use it as an inverse PD array to take longs now, for example, right? We're going to talk about that later, but for now, a fair value gap can be extended. We sometimes want to see it respected. Sometimes we want to see it inversed to take positions, like say for longs, for example, like long position. I'm looking for longs. I want to see this inversed, place my stop loss below, take profit, whatever, right? So in terms of the fair value gap, whether it's a buy side imbalance, sell side inefficiency, or a sell side imbalance, buy side inefficiency, it's basically, take it as this analogy, right? It is a paintbrush or a drawing. You have a paintbrush and it didn't cover all the lines here. You have the paintbrush came up here and stopped, came up here and stopped. This whole thing is, there's no paint. So you want to come back down, fill it, right? This here, same thing, right? But just for bearish. And then we can, which I'm going to talk about later in the future, we can use these PD arrays. And for me, this is the major PD array that I use to take entries off of. So I'll take my buys or sells off of fair value gaps or inverse fair value gaps, right? We said we extend these to the future, and then we take them as PD arrays to enter the market, longs or short. I'm going to go over one last example. Just random in the market. Here, boom. What is this? I'm going to give you a couple seconds. This right here. This is a hope you guys got it correct. Where's the pen? So this is a buy side imbalance, sell side inefficiency. Okay. Now we can see here how price came down, didn't fill this whole thing, came down, and where's the, here. This is the inefficiency, right? We can see how price came down, tapped into some of it, and that was enough for price to be accelerated higher, right? Now, again, don't worry, don't get ahead of yourselves. I'm going to talk about this later on, why sometimes just being tapped into it barely is enough, why sometimes when I see it fully tapped into, we will talk about that later. But the point is, you see this paintbrush that has not been filled fully, and you're going to ask me right now, well, since you said we have this paintbrush analogy where we want to see price come into this fair value gap and fill it fully as a paintbrush analogy, why at this time it just tap into it and push? What about the remaining of this? What about this that's left? This isn't filled, right? I'll tell you blindly without even looking, if we extend this in the future, eventually this was filled. I chose this example right in front of you guys, right? I didn't cherry pick this. Eventually, these fair value gaps that are not filled, like right here, this was the initial fair value gap, right? We got tapped into just a little bit, and that was enough for the market to be propelled higher. But the remaining of this fair value gap, which is this right here, that's the remaining, right? That's the remaining of the paint that is empty. There's no drawing here. If you go to the future, eventually, today, tomorrow, next week, next year, eventually they are all filled. All of them. That's an inefficiency. Okay? So that's for inefficiencies. Again, there's probably a homework that's going to be assigned with this lecture. Please make sure to do that. Do the homework. It's for you, not for me. You're good. So yeah, any questions, obviously drop them. That will be the lecture for fair value gaps. Not everything was given today in this lecture. This is just the beginning to kind of identify what a fair value gap is. Okay. Hope you guys find this insightful. And until next time, stay safe.